Hey, did you miss me? I never really know how to start these, but hey, in any case, welcome back. February, or as I like to call it as a French person, February, was something of a bounce back month for Ottawa real estate. Now, the market here is by no means red hot, but after a very sluggish January, February brought us a little flicker of hope. And that was especially the case in our condo market, which, let's face it, looked like it might just be down for the count. Also, on the back half of the update, we have a fun little story for you out of Napanee, Ontario, where a large tract builder tried to pull a fast one on a customer and got to the tune of over $400,000. So stay tuned, fuck around, and find out in your March 2026 Ottawa real estate market update. Let's go. All right, so we're gonna tell you all about that builder who got caught with their hand in the cookie jar a little later. But first, allow us to tell you all about how Ottawa's freehold and condo property markets fared last month, which of course would be February 2026. As always, we are going to start with freehold, and we're gonna get those stats up on the screen for you. 1, 2, 3. Ollie, can I get a sound effect for the stats? Whoa, sound effect and the jazz hands. Wow, Ollie brought it this month. All right, so in February, I think we can cut that gag out. Now, in February, we sold a total of 502 freehold properties in this beautiful city of Ottawa. 502 sales was a pretty huge improvement from the 402 sales we saw in January, the month that comes before February, but that is to be expected. I've said this before, but for those who are new around these parts, Ottawa's real estate calendar can basically be split into 4 seasons, and February marks the beginning of what I call pre-spring. Pre-spring is our shortest season. It goes to the end of March, and it's followed by actual spring, which runs from April to June. After actual spring, you have summerall or fummer, whichever you prefer. That runs from July to October. And then finally, you have MIBS, which stands for miserable, icy bullshit season. And that runs from November to January. So in a typical year, when we transition from MIBS to pre-spring, we expect to see higher sales volume. We expect to see an increase in the average sale price of properties. And we also expect to see a decrease in overall inventory levels, okay? Getting back to our February freehold sales volume for a moment, it's worth noting that in spite of being an improvement over the previous month, this year's February total of 502 was slightly lower than last year's February total of 515 sales, right? And in a big picture sense, a typical February would historically see us sell between about 500 and 600 freehold properties here, right? So this year's total is a little weak sauce, as the kids say. Emma, the kids still say weak sauce? Is that a thing? Oh, okay. So I guess the kids don't say weak sauce anymore, but it's a little weak sauce, as the elder millennials like to say. Now that I've been embarrassed by Emma. One last note on sales volume here before we move on. It's worth noting that the market here also got off to a very slow start last year. Right? If you recall, there was a lot of uncertainty at the start of 2025. We had a looming federal election in Canada. We were entering a trade war with the US. And of course, there was all the other stuff that was happening with the US as well. Right? So long story short, in uncertain markets, sales tend to slow. But in 2025, things did eventually pick up again right around May. Right? And on the whole, 2025 ended up actually being a pretty strong year. Whether or not we see the same cycle in 2026 is anybody's guess, but keep in mind that 2 months does not make a year. Now let's move on. The average sale price for freehold homes in February was about $775K. That's an expected increase from last month's average of $738K, but it is slightly below last year's February average of $783K. In a big picture sense though, $775, very solid number. It's the 4th highest February average we've ever had, so it's not gangbusters, but it's within less than like 2% of the 2nd and 3rd highest February averages. The number 1, of course, came in 2022, which was right as we were hitting our market's all-time peak. That year's average sale price for February, believe it or not, came in just like a hair below $900,000. Needless to say, we probably won't be seeing that again anytime soon. Now let's talk about our 3 indicator stats, which of course would be inventory, sales to new listings ratio, and days to sell. These are the three stats that we use in combination to get a general sense of whether we are in a balanced market, a buyer's market, or a seller's market for the city as a whole. Now, this is the part of the video where I would usually ask Ollie to explain how our inventory stat works, and he looks like he's ready, but I'm actually gonna give him a break this one. So, I know the answer. He says he knows the answer. We'll see next month. So inventory is a measure that looks at the relationship between supply and demand, and we express it in terms of months, and that's exactly what Ollie would have told you if I'd asked him, all right? So when I tell you that in February, our freehold inventory levels dropped from 4.04 months to 3.28 months, what that means in a practical sense is two things. First, it means that demand outpaced supply for the month of February. Second, it means that based on the market's recent pace, it would take us 3.28 months, 3 months and 1 week, to sell all of our current active listings. Of course, if those properties were all listed by the Papineau Group, they'd be sold like that. But hey, what can you do? It's also worth mentioning that 3.28 months is the lowest amount of freehold inventory we've had here since July of last year. And it's also the first time since then, July of last year, that our freehold inventory has fallen below the balanced market threshold and into the range we would expect to see in a seller's market, albeit just by like a couple of decimal points. Our sales to new listings ratio came in at about 50%, which is smack dab in the middle of the range we'd expect in a balanced market. And then the average time it took to sell a freehold property here in February was 40 days, right? And that is also within the range we'd expect in a balanced market. All three of our indicator stats are telling us that our freehold market got stronger in February than it was in January, which again is to be expected at this time of year. On the whole, I would characterize Ottawa's freehold market as a balanced market right now. That said, your usual reminder here that the market will vary based on the neighborhood and property type, right? And so if you're buying or selling, it's very important to make sure that you have the right strategy for your specific market. Right? And what I'm seeing right now is that in the suburbs, things are a little slower moving for your typical tract homes, right? Like I hate to use the term, but a lot of your cookie cutter townhouses and detached homes out there have a lot of competition, which means that buyers have a lot of choice, right? So a little slower in those segments of the market. When we move into the more central neighborhoods, properties that are relatively turnkey are moving quite well, right? In fact, little story for you. We submitted an offer for some buyers over the weekend on a property that literally got 60 showings, 60 showings, and received 10 offers within about 48 hours of hitting the market. Now, obviously that was a pretty special property, but it just goes to show you that demand is still very strong for good homes in good neighborhoods. And yes, of course, we got it. Wouldn't be telling the story if we didn't. So that'll do it for Freehold this month. Before we get to that fun little story about the builder who got caught trying to pull a fast one on some buyers, let's talk about the condo market where we finally saw a little glimmer of optimism. All right, so we're gonna get those February condo sales stats up on the screen for you. Ollie, can I get another sound effect? On three. 1, 2, 3. No, the Freehold one was so much better. All right, well, that's disappointing. All right, let's do this. So we sold a total of 213 condos in Ottawa last month, which again would be February of 2026. That was predictably much better than January's sales total of 158 sales, and it was also slightly better than last year's February total of 209. In a bigger picture sense, a typical February would see us sell somewhere between about 200 and 300 condos here in Ottawa. So this year's total is obviously on the very low end of that range, but I do think it's worth pointing out that the overall market sentiment around our condo market, not condos themselves, but the condo market over the last few months has been about as bad as I've personally ever seen it in Ottawa. And in spite of all that negative sentiment and all the stories out of Toronto about the market collapsing and blah, 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 sales volume hasn't really been hit all that hard, right? It's certainly not great. I wouldn't even say like it's very good, but we are still seeing sales happen at a reasonable clip and at a reasonably normal clip, right? So it's not all doom and gloom in condo land. And speaking of which, the average sale price for condos here in February came in at a little over $419,000. Ollie, why is that an important stat? Yeah, he doesn't know. The test changes every month. I'm gonna let Ollie off the hook here. The reason it's important is because it's a normal average, right? So you see the average monthly sale price for condos tends to land somewhere between about $410,000 and about $455,000 in just about every single month. And in fact, it's been that way since about the midpoint of 2022, with just a couple of minor exceptions and one major exception, right? And that major exception came last month. In January of this year, our average sale price for condos in Ottawa cratered, right, to a paltry $384,000. That was the lowest monthly average we'd seen in the condo space in over 5 years, right? And so I wondered in our last update, in last month's update, if that would just be a blip or if it was a sign of things to come, AKA the start of an even further downtrend in our already struggling condo market. Now, of course, it's too early to tell for sure, but if this month's average is any indication, then January's poor showing may have just been more of a blip than anything else, which I'm sure would come as very welcome news to anybody who is thinking of selling their condo in 2026. So, sales volume was not terrible. The average sale price bounced back into its typical range, but what about our indicator stats? So if you recall last month's update, condo inventory, sales to new listings ratio, and average time to sell were all in buyer market territory, right? In February, however, all three of those indicators fell back into their respective balanced market ranges, right? So another piece of good news for hopeful condo sellers out there. So to give you a little more context here, in February, we saw our condo inventory go from 5.5 months to 3.85 months. That's a massive drop, right? And 3.85 months is actually on the bottom end of the range we'd expect in a balanced market, right? Anything below 3.5 months is considered to be an indicator of a possible seller's market. Our sales to new listings ratio for condos in February was about 49%. That's right around the midpoint of the range we'd expect in a balanced market. And then our average time to sell was 55 days. Now that's on the high end of the balanced market range for that stat, but 55 days is nonetheless a pretty big drop from the 67-day average we had in January. All in all, not too shabby condo market, right? You picked yourself up, you dusted yourself off. You still kind of smell like booze and look like you could use some rest, but hey, it's a start, all right? Now, in spite of February's stronger overall stats, it is important to note that when it comes to Ottawa's condo market, there's still a pretty huge disparity across various segments of that market. When you look at the freehold market by comparison, our indicator stats for say like row houses or like townhouses don't differ wildly from the stats for like detached homes, right? For condos, on the other hand, there's a marked difference between the townhouse condo market, which is largely located outside of the city's core, and the apartment condo market, which is largely located in and around the core. The townhouse condos right now represent a very good and more affordable alternative to freehold townhouses for budget-conscious buyers. In fact, with interest rates and prices being where they are at the moment, the monthly cost of owning one of these townhouse condos is actually about the same, and in some cases lower than what it would cost you to rent that same townhouse condo, right? And it's honestly been a minute since we could say that. So the townhouse condo market is faring quite well on the whole. And I would call it a balanced market again, in a big picture sense. The market for apartment condos, however, while a little bit better than last month, is still very much a buyer's market. The monthly cost of owning an apartment condo in the very, very, very large majority of cases will still be a fair bit higher than the cost of renting that same condo. That said, and this will be my last point before we close out this portion of the update, if you are in it for the long run, I still firmly believe you are better off owning a condo than you are renting, even in the downtown apartment space. When you own, your mortgage payment essentially remains the same over time, whereas your rent is likely to increase year over year. So yes, the monthly cost of owning right now is higher than what they are for renting, but that gap is likely to close and eventually flip over time. And of course, when you own, you're building your own equity instead of building someone else's too, right? So there's that. I personally never approached this business with a one-size-fits-all mentality, right? I think everyone's situation is different. But if someone who wanted to live in a downtown apartment told me that they were operating on, like, say, a 2, maybe 3-year timeline, I would think that in many cases, renting might be the better financial play for that person. That said, I still firmly believe that the benefits of owning are very likely to outweigh renting for the vast majority of people who approach this with a longer view. So went a little longer on the stats this month than usual, but hey, that's what happens when the market starts to wake up. Glorious pre-spring. But if you'll give me just a few more minutes of your precious time, I'd love to tell you about an interesting recent court case out of Napanee, Ontario, that involves a builder who tried to do a couple of buyers dirty and got caught. Still there? Oh, phew. All right. Ollie, still there?
Oh yeah.
Emma? Yeah. All right, they're both still here. Good. Don't know what I'd do with all this camera equipment if they weren't. All right, so like I said, the case I'm about to describe happened in Napanee, Ontario. For those of you who are not familiar, that's a small town about 3 hours from Ottawa. It's about 90-ish minutes from Toronto. And until being featured on this month's market update, Napanee's claim to fame was that it is the birthplace of pop star Avril Lavigne, right? Which is cool and all, but like, I mean, has she ever even done a market update? Here's the background. In 2020, a couple signed purchase agreements for 2 pre-construction homes in a future subdivision of Napanee, Ontario, with a builder called James Selkirk Custom Homes. Now, if you've ever seen a pre-construction purchase agreement, you know that they tend to be pretty hefty contracts. Case in point, the contracts that these 2 buyers signed with James Selkirk Custom Homes contained a Schedule I, which stated that the builder would be allowed to terminate the contracts if the plan of subdivision for the project was not registered by the end of December 2021. First of all, time out. Schedule I? Really? Just to give you some context, a typical resale agreement has a Schedule A and sometimes a Schedule B. Right? And for some really complicated sales, like bank sales and things like that, you might even have a Schedule C. But as a Schedule I, we don't even know if that was the last schedule, right? So like if your builder purchase agreement requires that many schedules, you might want to ask yourself some questions. Back to our story. So this couple agrees to buy these 2 pre-construction homes, but unfortunately, they are notified at some point in 2022 that the plan of subdivision was not registered by the December 31st, 2021 deadline, right? And so, as per Schedule I of the contract, the builder was exercising its right to terminate their purchase agreements. Let me ask you, do you remember what happened to housing prices in Ontario from 2020 to the end of 2021? Ollie, do you remember what happened?
It was a crazy market.
Yeah, this was a time for a sound effect, Ollie. All right, so yeah, they did this, all right? So after terminating these 2 purchase agreements, what did the builder do? If you guessed that they donated a bunch of money to charity or started a soup kitchen, you'd be wrong, right? No, what they did was they immediately turned around and resold those same 2 pre-construction homes to new buyers at a much, much higher price. How much higher, you ask? Well, the new sale price on the 2 pre-construction homes was a little over a combined $440,000 higher than what the original buyers had paid. But hey, the builder just couldn't get that darn plan of subdivision registered on time, and shucks. Too bad for those first buyers, right? Well, the original buyers called bullshit. Right? And they hired a well-known real estate attorney called Greg Whedon, and with Greg, they took the builder to court, right? So in court, the builder argued that it had every right to terminate the buyer's purchase agreements because of the terms in Schedule I, which the buyers had agreed to when they signed the contract. But here's the thing. In Ontario, every single pre-construction purchase agreement must include something called a Tarion Addendum. Now, for those of you who may not know, the Tarion Corporation is an organization that administers Ontario's new home warranty program, and Tarion also plays an important role in regulating Ontario's building industry. Okay? And so the Tarion Addendum, which again has to be included in every single Ontario pre-construction purchase agreement, that addendum lays out a set of terms and conditions that all builders must abide by. And included in those terms and conditions is a provision that says a builder can only terminate a buyer's contract for 3 specific reasons. And those reasons are the builder's inability to secure financing, catastrophic circumstances, or governmental delays. Now, you can probably guess where this is going. The builder, of course, tried to argue that their inability to get the plan of subdivision registered on time fell under the governmental delay category. But it was brought to the attention of the court that the plan of subdivision had actually been approved by the municipality in August of 2021, which is well before the December deadline. It was the builder who had then suspiciously failed to complete the final administrative steps required to formally register the approved plan. So the judge ultimately ruled in favor of the buyers and ordered the builder to pay damages to those buyers in the amount of $440,200. And that amount corresponds, of course, to the exact amount of illegitimate profit that builder gained when he canceled the buyer's contracts and resold the homes at a higher price. And in her ruling, the judge explained that she felt the builder had violated 2 of the core tenets or principles of contract law. First, you can't paper over the law, right? In other words, any clause in your contract that contradicts or attempts to circumvent the law is unenforceable, even if the other side has signed it, initial next to it, the whole thing. So in Ontario, the law says that a builder can only terminate a pre-construction contract for one of 3 reasons. Then adding a 4th, a 5th, a 6th reason to that contract is about as effective a legal argument as saying that you crossed your fingers when you signed it. Doesn't hold water. Now, the second principle that the judge said the builder violated here was the duty to act in good faith after the contract was signed. Failing to register the approved plan of subdivision by the deadline, which again is it's a very simple administrative exercise, showed that the builder really had no intent of fulfilling their obligations under the purchase agreement. Instead, they were more focused on trying to create a loophole that would allow them to increase their profits at the buyer's expense. And that, ladies and gentlemen, concludes the story of the builder that f***ed around and found out. You know, back in 2021 and early parts of 2022, when home prices were again skyrocketing, we would hear a lot of these types of stories. So people who had bought into pre-construction projects before the market really took off would get these notifications that the projects were just being canceled for any number of reasons. And then those canceled projects would suspiciously be replaced with a brand new project that looked a lot like the canceled project, only the prices were much higher. And of course, it's great to hear a story like the one I just told you about the buyers out of Napanee who stuck it to the big guys. But in the very large majority of cases like this, it's the buyers who take the hit, not the builder. A lot of people just don't have the means, the resources, the know-how, the connections, what have you, to go after a builder in a case like this. And in spite of Terrion's best efforts, there are still a ton of loopholes that can be exploited to a builder's advantage. In a lot of cases, from that 2021, 2022 timeframe, you had a lot of cases of buyers who, they weren't just losing the home that they thought they'd bought just in time, but a lot of those same buyers were also ultimately unable to buy another property after that original purchase was canceled because of just how much prices had increased, right? So those buyers, in some cases, ended up being priced completely out of the market. Like the long-term financial impact of something like that can quite literally be devastating. So what do we take from all of this? Ollie, what do we take from all this? Wrong answer. All right. No, what do we take from all this? Look, I've said it 100 times, probably more. If you are going to purchase a pre-construction home, it is critical to make sure that you understand the risks that come with that type of purchase and that you're comfortable with those risks. Also, you should always, no exception, you should always have a good real estate lawyer review your builder agreement before your purchase becomes firm and final. Builders here have to include a cooling off period with every pre-construction purchase agreement, right? And during that period, you can walk away, no questions asked, if you decide that you're no longer comfortable with the terms of your purchase. And with that, it's time for us to give you a cooling off period until next month. But if you have any questions about buying, selling, or investing in Ottawa real estate, please don't wait. You can reach out to me at any time using the contact information below, or you can use the Calendly link in this video's description to access my calendar and book a discovery call with me at a time that works best for you. As always, we really appreciate you watching these videos. It really does mean a lot to us, and we look forward to seeing you next month.